So we have next one. Next one is related to borrowing cost. Now, what is borrowing cost? Any idea about borrowing cost? Borrowing, what I have done is I've taken an amount, okay, I've borrowed an amount, and that amount comes with a cost. I'm borrowing amount from, say, my friend. I'm borrowing amount from my from bank. It can be anything. So what I'm doing is I am borrowing amount, and for this amount I have to pay a cost, interest. So how to interest? It can be commission, it can be brokerage, it can be any other form of expense, cost. So that how you will take into record, how you'll account for those points we will complete here. An entity shall apply this standard in accounting for borrowing cost. The standard does not deal with actual or imputed cost of equity, including preferred capital or not classified as a liability. Further, an entity is not required to apply the standard to borrowing costs directly attributable to the acquisition, construction, or production of a qualifying asset measured at fair value. For example, a biological asset or inventories that are manufactured or otherwise produced in large quantities on a repetitive basis. So we have borrowing cost. What is borrowing cost? An entity shall apply this standard in accounting for borrowing cost. An entity shall apply this standard in accounting for borrowing cost. Okay, that is done. Now, the standard does not deal with actual or imputed cost of equity, including preferred capital, not classified as a liability. Standard does not deal with actual or imputed cost of equity. Standard does not deal with actual cost or imputed cost. Imputed means uh, 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 not the actual cost. Okay, including preferred capital not classified as a liability. Further, an entity is not required to apply the standard to borrowing costs directly attributable to the acquisition or construction or production of a qualifying asset measured at fair value. For example, a biological asset. Inventories that are manufactured or otherwise produced in large quantities on a repetitive basis. So we have entity, and that entity shall apply the standard in accounting for borrowing cost. Now the standard does not deal with actual or imputed cost of equity. What standard is doing? Standard is not dealing. Standard does not deal with what? They have given you that. Okay, 3 to 4 points there. Now you have definitions. The standard uses the following items with meaning specified. Borrowing costs are interest and other costs that an entity incurs in connection with borrowing of funds. A qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. We have borrowing cost. Borrowing cost is nothing but borrowing costs are interest and other costs that an entity incurs in connection with borrowing of funds. Borrowing costs are interest. Correct, it can be anything. Borrowing costs are interest or other costs that an entity incurs in connection with borrowing of funds. We have qualifying asset. Qualifying asset means what? Is an asset that necessarily takes a substantial period of time to get ready for its intended use. Substantial period of time. Over a period of time, it is getting ready for its intended use or sale. Substantial period of time means what? What constitutes a substantial period of time primarily depends on the fact and circumstances of each case. For some qualify for a few qualifying assets, it will be 12 months, less than 12 months. For few qualifying assets, it will be more than 12 months. So the usage period of an asset is substantial period of a qualifying asset. Example of qualifying asset. Qualifying asset includes manufacturing plant, power generation facilities, inventories that require a substantial period of time to bring them to a saleable condition, and investment properties, other investments, and those inventories that are routinely manufactured or otherwise produced in large quantities on a repetitive basis over a short period of time and are not qualifying assets. So we have examples of qualifying assets. So power generation, manufacturing plants, inventories, they can be classified as qualifying assets. Inclusions in borrowing cost. So what all points you can include in your borrowing cost? Obviously interest and commitment charges on bank borrowings and any other short-term and long-term borrowings. Then you have amortization of discounts or premiums relating to borrowings. Amortization of ancillary costs incurred in connection with arrangements of borrowings. Finance charges in respect of assets acquired under finance lease or under other similar arrangements. So these all points are covered under borrowing cost. Interest, commitment charges, amortization of discount, amortization of ancillary cost, all these points are covered under borrowing cost. Then you have borrowing cost and exchange difference arising from foreign currency borrowings. So exchange difference arising from foreign currency borrowings and considered as borrowing cost are those exchange differences which arise on the amount of principal of the foreign currency borrowings to the extent of the difference between interest or local currency borrowings and interest on foreign currency borrowings. So we have borrowing cost and exchange difference arising from foreign currency borrowings. Borrowing cost and exchange difference arising from foreign currency borrowings. So obviously foreign currency, this concept can get triggered while borrowing also. You can borrow from locally, you can borrow from any country outside India. Okay, a quick read, then we'll go for recognition of borrowing cost. The borrowing costs that are directly attributable to the acquisition, construction, or production of a qualifying asset are those borrowing costs that would have been avoided if expenditure on the qualifying asset had not been made. Such borrowing costs should be capitalized as a part of cost of the asset. The amount of borrowing cost eligible for capitalization should be determined in accordance with this standard. So you have borrowing cost, and borrowing costs are nothing but are directly attributable to the acquisition, construction, or production of a qualifying asset. So we have recognition of borrowing cost. The borrowing costs that are directly attributable to the acquisition, construction, or production of a qualifying asset are those borrowing costs that would have been avoided if expenditure on the qualifying asset had not been made. So this is recognition of borrowing cost. So we are recognizing borrowing cost. Other borrowing costs should be recognized as an expense in the period in which they are incurred. Capitalization of borrowing cost. Borrowing costs are capitalized as a part of cost of a qualifying asset when it is probable that they will result in future economic benefits to the enterprise. So recognition of borrowing cost is done. After recognition of borrowing cost, what are we doing is we are capitalization of borrowing cost. So say if I have any cost incurred for qualifying asset, okay, that cost I need to capitalize. The borrowing costs are capitalized as a part of cost of qualifying, and when it is probable that they will result in future economic benefit. And one more thing, I know that this suppose repair to machinery, and I did that repair. That was not annual maintenance. If it is annual maintenance, then I'll not capitalize. But that repair which I did, that repair enhanced the capacity of my machinery. So yes, that I'll capitalize. I'll add back to the cost of my machinery. Capitalization of borrowing cost. Now here for repairing was very huge, and for repairing I have taken a loan. Okay, and 10,000 is the interest amount. So that 10,000 I'll have to capitalize. I'll have to add back. Specific borrowing, general borrowing. Specific borrowing to the extent that funds are borrowed specifically for purpose of obtaining a qualifying asset, the amount of borrowing cost eligible for capitalization on that asset should be determined as actual borrowing. So we have specific borrowing and we have general borrowing. To the extent that funds are borrowed specifically for the purpose of obtaining a qualifying asset, the amount of borrowing cost eligible for capitalization on that asset should be determined as actual borrowing cost incurred on that borrowing during the period less any income on the temporary investment of those borrowings. So you have specific borrowings, you have general borrowings. Specific borrowings, general borrowings. So specific borrowings are specifically for that particular asset. General borrowings are generally, it's general, the amount borrowed is general. I can use it for any purpose. To the extent that funds are borrowed generally and used for purpose of obtaining a qualifying asset, the amount of borrowing cost eligible for capitalization should be determined by applying a capitalization rate to the expenditure on that asset. The capitalization rate should be weighted average of the borrowing cost applicable to the borrowings of the enterprise that are outstanding during the period, other than borrowings made specifically for the purpose of obtaining a qualifying asset. So we have two types of borrowing. Specific borrowing, I am borrowing amount to import my machinery. Okay, specific borrowing. General borrowing is I have borrowed an amount and that amount I can use anywhere and for anything. I can purchase qualifying asset. I can go for any other cost also. So general borrowing and specific borrowing. Then we have commencement, suspension and cessation of capitalization of borrowing cost. So as for AS 16, there are three situations arise in relation to capitalization of borrowing cost: commencement of capitalization of borrowing cost, suspension of capitalization of borrowing cost, and cessation of capitalization of borrowing cost. These are discussed here under commencement of capitalization of borrowing cost. Capitalization of borrowing cost as a part of cost of a qualifying asset should commence when all the following conditions are satisfied. So they have given you the conditions. Suspension of capitalization of borrowing cost. So you have commencement, you have suspension, and you have cessation. So commencement is when you start. When are you starting? Commencement. So expenditure for acquisition, construction, or production of a qualifying asset is being incurred. So at that time, it is commencement of capitalization of borrowing cost. Borrowing costs are being incurred, and activities that are necessary to prepare the asset for its intended use or sale are in progress. Suspension of capitalization of borrowing cost. Capitalization of borrowing cost should be suspended during extended period in which active development is interrupted. However, capitalization of borrowing cost is also not suspended when a temporary delay is a necessary part of the process of getting an asset ready for its intended use or sale. So we have suspension of capitalization of borrowing assets, and then we have cessation. Cessation is to stop. Suspension is temporarily you are increasing the period, you are decreasing the period, you are stopping it temporarily, you are doing a delay. Such type of things are covered under suspension of capitalization of borrowing cost. Cessation of capitalization of borrowing cost. Capitalization of borrowing cost should cease when substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete. When the construction of a qualifying asset is completed in parts and a completed part is capable of being used while construction continues for other parts, capitalization of borrowing cost in relation to a part should cease when substantially all the activities necessary to prepare that part for its intended use or sale are complete. So we have cessation of capitalization of borrowing cost, suspension of capitalization of borrowing cost, and commencement. Yes, 3 points. A quick read, I'll take a pause, then we'll start from disclosure. Next one, disclosures. Financial statements should disclose the accounting policy adopted for borrowing cost, amount of borrowing cost capitalized during the period. Then we have comparative provisions under IND AS 23 and AS 16. Okay. And then we have illustration 11. So TNL Limited is a large construction company which is presently involved in construction of railway bridge over the Ganga River at Patna. The project cost is rupees 125 crore, 40% of which is financed by borrowing from Asian Development Bank at an interest of 3%. There has been a delay in completion of the project, and the project manager of the railway bridge construction site has identified that delay construction of the railway bridge has happened due to high water levels during the monsoon months of July to September. Ms. Sonali Mathur, the accountant of TNL company, has not suspended capitalization of borrowing cost and reflected the same in the cost of qualifying asset. So we have TNL Limited is a large construction company which is presently involved in construction of railway bridge. Okay, and the project cost is 125 crore. 40% of which is financed by borrowing. So out of 125 crore, 40% is financed by borrowing, and we are supposed to pay 3% interest. There has been a delay in completion of a project, and the project manager of the railway bridge construction site has identified that delay construction of the railway bridge and has happened due to high water levels. Why delay has happened? Due to high water levels. Now, Ms. Sonali Mathur, the accountant of TNL company, has not suspended the capitalization of borrowing costs. She has not suspended because of this delay. She has not suspended capitalization of borrowing costs. It is still continuing. So we are supposed to find out what is the amount. So in case the work got suspended due to temporary delay, which is necessary part of the construction process, capitalization of borrowing costs would continue during extended period during which high water levels delay construction of the railway bridge, as such high water levels are common during monsoon period. Okay, so whatever Miss Mathur did, suspension she is not going for. That is correct. Then we have illustration 12. Illustration 12 is very easy. You just have to take figures from your question and paste it here. You are supposed to identify nature of asset, interest amount, and interest charged to income statement. That's it, and you are done. I hope you are comfortable.